Okay, so uh, I have started the recording and we can start. So this is what we went over last time. We went over a lot regarding trading systems and regarding risk management, regarding like your spot plan, risk to reward systems, how you should approach trading in general, and just a lot of things like psychological things, etc. But we didn't go into any technicals. So today I want to go into a lot of technicals that you can use in nearly every style of trading. Some good mid-cap lists who are fundamentally good and has a hype or a narrative. I'll post the list in a bit. It's like, I usually just trade these coins. Just slide it out a bit. These are the coins I look at the most. So I have different lists for spot and for futures, but these are coins I like trading. It's gonna be in the recording as well. I would exclude DYDX, by the way. I would exclude that one. That one is not easy to trade. It was just a really good setup for once. Okay, so for fundamental TA knowledge, there were two main things I wanted to talk about. I am gonna explain everything regarding market structure. And I'm gonna start it relatively simple, and I'm gonna gradually increase like the depth of knowledge. And the main thing I want to go over is something called time frame alignment, because this, in my opinion, time frame alignment is the most important thing in trading. Because no matter what you use, no matter what style you trade, time frame alignment is something that you need in every single trade. Because let's say you are looking for longs on the 4 hour, but the daily, the 3 day, and the weekly are extremely bearish, then even though the 4 hour might look good, your risk reward is going to be terrible. So time frame alignment is something that I'm going to talk about a lot in this stream, and something I think is extremely important. Because time frame alignment is the reason why I was calling like, okay, we need to look for shorts here because we are in a bearish market trend on the daily. So even though the 4 hour might look good, if we actually close this daily below our mid range, then we have just SFP'd our mid range while we're in a daily in a bearish market structure. So we should be looking for shorts, and that's the main reason why we open so many shorts. So as I said, I'm going to start with market structure for the simple reason that market structure is very fundamentally like kind of a core concept and relatively simple to understand, and it is a great way to explain time frame alignment. So that's why I'm going to start. Okay, so the very basic understanding of market structure is this concept. Very simple. If you are making lower lows and you are making lower highs, you're in a downtrend. If you are doing this, you're in an uptrend. Most people know this, and if I draw it like this, like lines, it is relatively easy to understand because the lines are very simple to read, right? That is market structure. Market structure dictates where your lows and your highs are, and that shows you where the trend is. Because all markets do when they move is they expand and retrace, and they expand and they retrace. That is basically all markets do. And then the third one is obviously break structure. But the two most common things by far are expand and retrace, and that is how you find your market structure. How do you reckon triangles? I am not someone who trades chart patterns except for the ones that show something in market structure, so I can go over that later. So for example, something that shows price compression like this, that is something that in my opinion like tells a story, right? Because price is compressing and you are taking out the lows every time. Well, all of this liquidity is being untapped. So that is something I can trade. But if you have like a pennant like this where it's actually just compressing, well, all this is telling you is, well, it's gonna go up or it's gonna go down, right? One of the two. I just did that in inverse. So I only use the chart patterns that in my opinion mean something. Okay, so let's start on like a 3-day time frame, right? Am I on log? I am not. Okay. Let's start on a 3-day time frame. The thing with market structure, because this concept is something that a lot of people understand quite easily, right? But markets don't move in such a clean way. If markets would move in such a clean way, everyone would be rich, because you would literally just buy, and you would sell the highs, right? But markets don't work like that. Markets are way more complicated. So for example, let's mark a structure, right? We have a low, we have a high, we have a low-ish, we have a high, low, high, low, high, low. This is our last high. That is very important. So I'm gonna go back and clear this, and I'm gonna mark this last high. Something that you want to look at for structure is candle bodies. The wicks don't matter for market structure. I think people explain this in a way where they say wicks do the damage, bodies tell the story. That is very true. Wicks can often cause a lot of confusion because, for example, at SFP, right? If we take this wick, this is a nice wick. If we were to just go above this and go back down below, and the candle bodies would close like below the previous candle close, right? So somewhere over here. Even though we went above that wick, we didn't actually break market structure. Because what we look at are the candle bodies. The candle bodies need to close higher than the candle bodies, and preferably the wicks. So let's mark the bodies. This is our last high. I'm not gonna explain this in a way ICT does, by the way, because I don't like ICT. In ICT, you would call this your swing high, and all of these are internal highs. That is not what I'm gonna teach, because that is ICT and that is not fundamentals. So what I'm gonna do is I'm gonna simply mark our last high. I'm gonna mark it blue. I want this blue. Oh. Okay. So what you want to be looking for, if you are looking to break this downtrend, right? Because this is a downtrend, is we want to close candle bodies above this level. So I can extend this line, and what we can see is that this is the first place where we broke that line. So the moment this happens, we can assume that market structure shifts. And it's very important to note that it only counts on this candle. It is actually only on this candle where it goes decisively above and closes above. These two wicks here don't count. Quite frankly, these two wicks would have made for a better short than it would have actually made a long. And the short wouldn't have worked in the end. Or depending on where you would take profit, right? But these don't mean anything. You are still in a downtrend after this. But the moment this closes above, that is when you are now in an uptrend. And it doesn't matter how you mark this. Every style marks it different, right? I use change of character. You can also name it like market structure shift, so MSS, or breakup structure, BOS. Doesn't matter how you mark it. What is important is that on this 3-day time frame that we're at, we have now broken this high, so we are now in an uptrend. So logically, where on the left here, we would be looking for shorts. We want to sell this, TP, sell, TP. We now want to be looking for buy, TP, buy, TP. This concept, and I know a lot of people understand this like to a decent amount of knowledge, right? A lot of people understand that, but this concept is very important for the next thing I'm going to talk about, where you need to understand that this kind of market structure, it follows through time frames. So, for example, you can see right over here we had this kind of up leg, where, yeah, this is on a 3-day still a bearish market structure, right? But if you were to zoom in on that place, so if I were to go to like a 3-hour, like a 4-hour, right? Where are we? If I were to zoom in into this place, well, on the 4-hour, it kind of looks like an uptrend, right? I chose a horrible example. This is probably a news event. So let's go on a different one, right? Let's go to this, because we are still in a downtrend on a high time frame here. but on a lower time frame, we are uptrending. And it's very important to understand that there's a difference and that you need to use that difference to maximize your risk reward and to maximize how safe your plays are. What are your thoughts on when a body closes above the structure body high but below the same candle's wick? I don't know what other people use for this. If that happens, so let's take an example, right? Let's say this close. This one. We have a wick here. And we have a candle body here. Depending on the time frame, on very high time frames, I would count this as a break of structure, and we are now in an uptrend, right? At this part of the structure, we are already in an uptrend, but let's just pretend that we're not. I would count this as a break of structure on a high time frame. On a low time frame, I would not count this candle as a break of structure for the simple reason that it is very likely if you close this close above a wick, that you are just going to grab this liquidity and then go on a downtrend. Because closing this close makes it really easy for people to like open shorts here, and then that liquidity will just get grabbed and force a push to the downside. So I personally, to actually confirm full market shifts, I want the candle bodies to close above the wick as well. If the wick is like really big, then whatever. But on normal kinds of wicks, I want it to close above the wick as well. And I think one of the good examples for this is a R short we took, because I took this based on an SFP, right, mostly. So what happened here is if I'm on the, what's it called? If I'm on the 4 hour, what we can see is I had this low, this high, this low, this high, right? This is a downtrend. So according to this downtrend, I would mark out the highs like this. And just for testing, I don't actually use the backtest tool a lot. So this, we didn't see that yet, right? So I marked the candle bodies right over here. And I said, okay, I have a lot of confluence for this level. What I'm going to do is if we go above this level and we close the candle below, that is what I'm going to take a short right over here. And the reason for that is very simple. We were in a downtrend, and this was the high. If we wick above the high and then close the candle below that previous high, we are still on a downtrend. But what we also know is that we have now grabbed this liquidity and we did not accept above. We got into that area for the market structure shift. We got there, buyers got us to that point. But even though we got to that point, we couldn't actually keep it there. So the buyers weren't actually strong enough to keep it above that point, but the sellers were strong enough to push it back down. So clearly there is still more incentive for people to sell than to buy, because we were in such a good spot and people just stopped buying. So people apparently don't want to buy. So when this happens, that is when you can simply take that short right over here, stops above the wick, and your target is going to be the next low right over there. We took a very similar short to this. I took it on a slightly lower time frame, but this one was a bit more clean. So for candle bodies, I want them to at least close above the previous candle body high, and preferably above the wicks as well. Alright, see you, Tech. It's gonna be recorded, so you can watch it back later. So that is the very basic understanding of market structure, where you want to confirm, like this, you want to recognize this up or downtrend. The first thing you should do when you're looking to take a play on something is you want to know if it's in an up or downtrend, because you want to know if you should long or short. So if I go to Bitcoin right now, our current time frame, what do we see here? Well, let's start over here, right? We are on the daily time frame. Those are high, low, high, low, high. After this high, we made a low over here and a lower high over here. Making a lower high does not break structure. If you make a lower high like that while you're in an uptrend, that is completely possible because you could just do something like this, right? That is very possible because you're still in an uptrend. But the moment you make a lower low as well after that lower high, so the moment you have a lower low, a lower high, we would mark out our low, and the moment we make a lower high into a lower low, that means you have now shifted structure. That means you're now in a downtrend. So when I connect that to BTC, right? This is our lower high. We had our low over here. And we went below and we closed the candle body below. We didn't close it below the wick, right? But we did close it below the body. So we can assume that we are now in a downtrend. And what happens after that? Well, the actual low ended up being here. This is our next high, which is again a lower high. Because if we were to draw a line from the candle bodies, you can see that after that we didn't actually close the single candle above, right? So we are still in a downtrend. So what can we actually expect after a lower high? We can expect a lower low because we have confirmed right over here that we are in a downtrend, and downtrends make lower highs, lower lows. So lower high followed by lower low. And then we just do the same thing again. I draw a candle from the high or a line. We kind of have two highs over here, right? So in this case, will draw two lines. Oh. We'll draw two lines like that. And what do we do after the low? Well, we go up and we make another lower high. What can we expect after the lower high? Very simple. We can expect another lower low. And we got exactly that. This is very over-explained. The reason why I'm looking for shorts in general. Because in my opinion, this is a very, very clear indication of just us being in a downtrend. And us being in a downtrend like this means that you should not necessarily look to long, like all the way up. What you should be doing is you should be prioritizing shorts until the highs are broken. Because logically speaking, if you take it from this time frame, you are downtrending. This is quite literally just us doing this. And yet, a lot of people have this mindset where they keep longing and longing and longing. And you can absolutely long if you go on a lower time frame, right? It is absolutely possible. But on a higher time frame, you should be looking for shorts. If you're looking for longer time frame plays, and you know BTC is in a downtrend like this, you should be looking for shorts. You do not take swing longs when BTC is in a downtrend like this. And obviously, I've shared the chart a lot, right? Apart from that, I also showcase that BTC is in this little channel. Just gonna make these a lot more visible. The one and especially the mid-range. I also showcase the BTCs in this channel, and I think this channel is absolutely amazing. Because this channel showed us that, okay, we are in a downtrend, we know that. And we then tapped mid-range, closed the candle below. That was an absolute textbook example of a short. Because, what do? Downtrend. We went to our first resistance area, right? Because in general, when you're in a downtrend, you're going to look for resistance. We touched that resistance. We then did not manage to close a candle body inside of that resistance. We closed below. So naturally, you would short. You tick all of the boxes. You touch resistance, you're in a downtrend, and you failed to reclaim an important level. So naturally, you would just short. Because there is no logical reason to think that you're going to break that structure. That is essentially what I wanted to talk about market structure. Does anyone have any questions about that? And if not, I'm gonna go into the main subject of today, being time frame alignment. And don't be afraid to ask, by the way, because this class specifically is teaching like very fundamental things, so it is absolutely it's like really important to fully understand it. So if you have any questions, just either ask here or DM me or like tag me in chat later or whatever, and I'll see if I can answer it. All right. It is still way too hard. Had this problem last time as well. Okay. That was it for mark structure. If you have any questions, I'll just look at them later. And I'll go over them once I see them. Okay, so time frame alignment. Time frame alignment is something that is used on literally every trading style, like no matter what you trade. As I said, I'm going to use market structure to explain it, because market structure is very clear to see for most people. If you trade a lot, then you will essentially just unlock like this part of your brain where you can look at a chart and be like, okay, this is a downtrend or an uptrend, and these are the highs, these are the lows. Because it just like, it kind of just looks like it, right? You can see the lows and the highs on the chart. It kind of makes sense. So let's start with some time frame alignment, right? What you would do if you were to chart a coin, I'm gonna do it on Bitcoin first, and then I'll go over some coin suggestions, and we can take one of those. Is, let's say I start on a monthly time frame. I'm looking at a very old coin, so I want to look at a monthly first. What I will do here is, okay, identify. Are we at an uptrend or a downtrend? Well, on a monthly, Bitcoin is clearly in an uptrend, right? Because we're making higher highs and we're making higher lows. So we are in an uptrend. And I will go on the weekly. Are we in a downtrend or an uptrend? Well, high, low. We broke this high over here, so we are now in an uptrend, right? High, low. We are now in a downtrend on the weekly. And then we made, you could count this high. I'm not going to do it for this example, but you could do that. I'm going to count this as the new high. So that is a lower high, right? Then we made a higher low and a higher high. So weekly is currently in an uptrend, right? Because this is our last low. And we made another higher high. But we are currently making a higher low, hopefully. I assume we're making a higher low. Otherwise, that would be pretty bad. But I do think we're making a higher low. So weekly and an uptrend. And that is where it starts getting a bit more complicated. Because we know the weekly is in an uptrend. We know the monthly is in an uptrend. But when we go on the daily, we have just identified that we are in a downtrend, right? Because we are making lower highs and lower lows. So naturally, well, this is where time frame alignment comes in. According to our higher time frames, we want to be looking for longs, because the monthly and the weekly are in an uptrend, so we want longs. But our daily is in a downtrend. So where time frame alignment comes in is we know that we should be looking for longs, but we know that we can't because the daily is in a downtrend. So what we're going to be looking for is for any kind of high to get broken before we actually start looking for longs again. So if I were to draw these a bit differently, right? This is our low, this is our high, lower low. We are currently in the process of putting in a lower high again, right? This is a lower high. So if I were to draw a line right over here to the right, this is the line we would need to break to be in an uptrend on the daily. And once we are, you could say we are an uptrend on the monthly, weekly, and daily. So I naturally want to be looking for longs on essentially any time frame. If I go on a very low time frame, that might be different. But for nearly every time frame, I want to actually be looking for longs because we are in an uptrend. So let's zoom in even more. Let's go to 4 hour. Are we in an uptrend or a downtrend? Well, high, low, downtrend. Our last high was up here. Because we're on the 4 hour, you could argue that it's over here. I think this is our 4 hour high. At least on that time frame, right? We have created a new one. So that used to be the 4 hour high. Now we made a lower high. Well, a lower high, higher low, lower high, lower low. And because this broke, we are, once again, completely in a downtrend. Because the daily is in a downtrend and the 4 hours in a downtrend. Our weekly and monthly are still in an uptrend, but both of those are in an uptrend until we break this level. So we don't care too much about that because we can assume that it's going to stay in a downtrend. In an uptrend for a while, right? Because unless we start actually closing below this level, we are still in an uptrend. So there's no reason to assume that it's not going to be like that. So we can take this bias, so our daily downtrend and our 4 hour bias, we can take that into account and say, okay, on the daily and the 4 hour, we should be looking for shorts. So let's go and find some resistance where we can short. So in this case, we had our high over here at an area of clearly where it was clearly resistance, right? Because we rejected over here. Just gonna make it red to show. And we rejected over here. And if we go on our left, you can see that on that exact same area, we bounced a few times, right? You could say the level is something like this. I'm not an SR trader. I do have actually one chart. Let me show. Here's this one. These two as well. And then ta-da, our range. So what we can see here is actually I'm missing this one. This is a resistance line as well. So because we know the daily is in a downtrend and our 4 hour was in a downtrend as well, we wanted to look for shorts the moment we broke this 4 hour low, right? And the moment we broke that 4 hour low, you can start looking, okay, where is that resistance? And that resistance was somewhere over here, right? I would personally take this candle body right over here. And I would say, okay, that is our resistance line. So I would just short that. I would actually just short the previous candle body and put it right over there. Simply because we know the daily and the 4 hour in a downtrend, we know that naturally there's a very high chance that that is just going to keep going. Because it is way more likely for trend to just keep going than it is to break. So when something like this is happening, naturally you want to be looking for shorts rather than longs. And until that structure everyone actually breaks, we want to keep it that way. So I would count this as a 4 hour high. If I go on a slightly lower time frame, so the 1 hour for example, I would say this is our 1 hour high, right? So until we break this high on the 4 hour, I will assume that we are in a downtrend and I will be looking for shorts rather than longs. And this is where time frame alignment really comes in, is because if you're looking for plays on the daily, for example, you can use this strategy, this kind of zoom in and look for the same trend. You can use that for entries. So if you would make a play on the daily, like we just did, like we got a daily bias for shorts, then we would go on the 4-hour and actually confirm that play and confirm the entry, and we would look for an entry on the 4-hour. And the same thing here. If you are looking at a 4-hour right over here, you would be looking for entries on the 1-hour. So you would wait for the 1-hour to also be in a downtrend because 4-hour is, and then you would short at the nearest resistance. So on the 1-hour, you would short somewhere over here. I'm gonna just take these candle bodies, just place it above the wick. Oh. And actually, I will target the last low. And the last low is this one, right? Hey, Pico, what's up? I saw you actually got some really nice plays, and even though we're kind of downtrending really hard. You see, Pika is an exception. He just kind of buys and the price goes up by itself. The real market maker. Yeah, no problem, Poo Poo. I really, I'm glad you enjoy it. So, because we know all of our time frames are in a downtrend, especially right now, right? Daily, 4-hour, 1-hour are in a downtrend. I don't count these kind of things as highs, right? If I go on a 30-minute, well, that is a high. If I go on a 1-hour, I don't count it. So, because we can see most of our time frames being in a downtrend, we can assume that we need to short. How do I determine which time frames matter for this? Is I take a rule of 4 times higher. So if I am on a 4-hour, I want the 16-hour to be in a downtrend. Am I going to look at the 16-hour? Absolutely not. There's no reason to. So I'm just going to take the daily, right? If I'm looking, for example, for shorts on a 1-hour, the 4-hour also needs to be in a downtrend. And if I'm looking for shorts on the 15-minute, then the 1 or the 2-hour needs to be in a downtrend. You just kind of scale that up to make sure that your play is also viable, like 1 time frame higher. So 15-minute, you go to the 1-hour. 1-hour, you go to the 4-hour. 4-hour, you would just go to the daily, right? You can put the 16-hour on there, but I don't think anyone actually wants to do that. So you just go to the daily. Daily, you go to either the weekly, the 3-day, or the 6-day, something like that. Weekly, you go to the monthly. The rule of thumb is about 4 times higher. Is this live recorded? Yes, it is. I record all of my streams. Wait, I'll get the link as well. And I put them all on the same channel. Right over here. That's where all of my streams are. So if you missed the last stream where we went over a lot of fundamental trading things, more like trading plan-wise, we had like a great stream about that last week. So it's over there as well. And that's also where my stream about harmonics is and my stream about fibs. And I'm going to do another stream about harmonics next week. But anyway, this is... that is the rule of thumb. 4 times higher or 4 times lower, right? If you determine, for example, the daily is in a downtrend, then you would go on the 4-hour, also look for that downtrend, also look for that resistance, and then take a short. And it is the exact same thing in an uptrend, right? If I were to go somewhere early in this market, so if I were to go to this area over here, I'm actually going to go on a different chart. But if I'm going to go to this area over here, right? And we know our daily is in an uptrend here, because we can see, like, this is not really a low, right? It's somewhere over here, but okay. Let's say our low, our high, a higher low. This was a previous high. So because this was a previous high, right over here, we broke that, made a higher high, and then we made a higher low. We know the daily is in an uptrend. How do you pick exactly where you're short or just for the previous high? That is something that highly depends on your trading system. So I use fibs for that, I use harmonics for that, or I use volume profiles for that. You can use anything for it. ICT uses FEGs. Support resistance traders use, well, support resistance. A lot of traders use order blocks. Sometimes you use chart patterns. Whatever it is, you would just look for the last high assuming it's a downtrend. Or let's actually show it on the chart, right? And I'll show it in multiple different trading styles. So let's go on this chart, right? We are in an uptrend on the daily. So what do we want to do? Naturally, we want to look for longs. So I would go down to a lower time frame. I'm on the daily, so I would go to the 6 hour or the 4 hour. I think the 4 hour is the most common time frame, so we're just going to go on the 4 hour, right? So what I want to do is I want a long somewhere in this area. So I'm on the 4 hour. I'm going to do the exact same thing I just did for the daily. High, low, high, low, high, low. Where's our last high? Right over here. And keep in mind, we are looking for longs because the daily is in an uptrend. Our 4 hour over here is in a downtrend, but we want to look for longs because the daily is in an uptrend. So we wait for that 4 hour to also be synced up and to break that structure, which we did right over here. We made a new high over here, and then we made a higher low. Now, the hard part is actually taking that long, just like you just asked, right? Where do you actually take that long? Step 1 is waiting for that uptrend to start, waiting for that 4 hour to be aligned with the daily. That is why it's called time frame alignment. You need the 4 hour in this case to be aligned with the daily. So you wait for that to happen, and it did. I'm gonna mark this. I'm gonna mark it MSS, and I'm gonna also write down what it stands for. Market structure shift. I'll actually turn it up a little so it's easier to read. This is where we are now in an uptrend. We are now time frame aligned. So where do we actually long? I'm gonna start with support resistance. I am once again gonna go on our daily time frame because our original time frame, which we're basing this play on, is the daily time frame. And I'm just gonna mark some support resistance areas. We had a few candle bodies over here, right? Actually, I'll just use this one. So we had a few closes over here. We had a nice little bounce over here. Saw a few reactions. Had some over here. Some over here. These are some nice levels, right? We have some support resistance levels now. And these are from the previous range. This was our previous range, right? Nice support level there. So I have now marked like my areas of interest from the perspective of a support resistance trader, and now I'm gonna go on the 4 hour, and I'm gonna use those to determine where I want to long. And you can already see that after the structure shift, after the uptrend, what we were doing is we go up and we went for that first low on this SR level. So what you could do is you could just long on the support resistance level, right? We have an SR level here, we just long it, and you would TP the next high. In reality, you wouldn't take this play because the risk to reward ratio is 1.4, and that's pretty bad. Because you would have to place your stop either over here or like over here. That kind of sucks, right? So you wouldn't take this play, but you could, right? This is completely time frame aligned, and win rate wise, this would be a good play. Risk to reward wise, terrible. You don't want to take plays for a 1.4 risk to reward max. So we would go for the next play. This is our low, high. We came back to that exact same support resistance level again. Is literally place my long on the level, right? Just place it below the last low. And there's my long. And this would be my TP, right? It would be TP1, TP2, probably. Because we know these are daily SR levels, we can expect price to bounce here if our current time frame is also in an uptrend and to go to the next level. Because it is simply the most likely thing to happen. Because price is more likely to continue trend rather than break the trend, right? Because the most natural thing to do is to expand, retrace, expand, retrace. Break of structures are way more rare than simply continuation of trend. How much do you take in TP1? Depends on your trading style. In a play like this, I would simply take like 50% or something. Maybe a bit more. It's like, it depends on your play. I personally take the TPs about equal on every point, but I personally base them on fibs, right? So my 0.382 and my 0.618 TP are going to be heavier than the others. And if I'm trading a shark, then my 0.5 fib is going to be heavier than the others. But that depends on your trading style. Would be okay, let's say, look 200 EMA on the 1 hour and 4 hour and determine bias with that. Yeah, absolutely. I would also take market structure into account, but moving average are a great way of doing so. Because moving averages kind of show that, right? Let's see, I don't actually use moving average. Wait, I have play bits. Does it work? Hey, it works. Nice. Okay. Yeah, it is kind of the same thing we just confirmed, right? This is our 4 hour 200 moving average. Determined bias. Determined bias is a different kind of wording for what I just explained with market structure. Your bias is either bullish or bearish, in this case depending on market structure. If you are making higher highs and higher lows, our bias is bullish. If you are making lower highs and lower lows, our bias is bearish. So our daily bias here is bullish, but right over there on the left, our 4 hour bias is bearish. We want those two to align to be able to take a play. So that was it from an SR standpoint, right? You wait for the next higher low and you take it long there. So let's look at it from the perspective of someone that trades EMAs or moving averages. I don't know if this is an EMA or an MA. It's whatever. If you trade moving averages, let's take it like that. You can see we are trading below the moving average over here, so we can assume that we are in a downtrend. We are trading below the moving average, so we are in a downtrend. Up until this point, where we started trading above it and we closed multiple candles above it, we were in a downtrend. So naturally, we would not long this. We would be looking to short, possibly to short, right? You would get stopped out once, but you would have had 2 good shorts before that. And then, once we actually flip this to support, which we did like right over here, right? We can now confirm an uptrend because we are trading above the moving average. You would look for a long position and you would simply place it below the last low. And where you would TP, well, I know Ty just takes like the highest wicks and TPs there, right? He doesn't like actually take TPs, he just full TPs at the highest wick. So where you TP, that is really hard to do with moving averages, but you get the point. You would look for price to start trading above the moving average because you were looking for an uptrend. And we can look at that in our current range as well, right? On the daily, we know we are in a downtrend. We are trading below the moving averages. We are in a downtrend. So you would go on the 4 hour and you would look for taps of this moving averages and you would short them because you know the daily is in a downtrend. So you would short this and put your stop loss somewhere on the last high, right? And you would probably TP this wick. And then once you go back up, you would do it again. You would short somewhere over here, and you would put your TP somewhere, I mean your stop loss somewhere at the last high, like somewhere over here. And then what would you TP? You would TP this wick over here. So even on the current time frame, you can see because our daily is in a downtrend, which we established earlier, and the 4 hour is also doing that, we can look for shorts. Because we are trading below those moving averages, this moving average. So even on the current time frame, according to moving averages, you should be looking for shorts. So let's go over here. Our daily bias in this area was bullish, right? So we are looking for longs here. Let's look at it from the perspective of an ICT trader. Full disclosure, I do not like ICT. I think ICT is very easy to steal money from because they're easy liquidity. But anyway, let's look at it from an ICT perspective. From an ICT perspective, you would go on the time frame you're looking at, and you would mark, for example, fair value gaps. So we have an IFEG here, stands for internal FEG. I'm going to use this one. Internal FEG right over here. And a normal FEG as well. This is called a Reaper setup, where you have an IFEG and a normal FEG right next to each other. You can expect, if you are in an uptrend, you can expect price to go here and use it as support. And that is actually funny because I picked perfect example of why I don't like ICT. Because you don't actually get that chance in ICT. They front run you. But anyway, do we have any more FEGs? We don't. Let's go on a 4 hour. So we go on a 4 hour. We look at our market structure shift, right? This is still the same line, still purely market structure based. I'm going to turn this off because it's probably confusing. We have broken structure. We closed candles above that line. So we are now in an uptrend. We have this Reaper setup here, an IFEG followed by a regular FEG. So you would take a long and you would place your stops below the FEG. Terrible risk reward. I really hate ICT. It is what it is. Its risk reward is terrible. Okay, but you would place your stops below the FEG. I would personally place it a slight bit lower. You would place it like somewhere over there and UCP the next week. And that would be your setup from an ICT perspective. Those are two relatively simple examples, and just ignore the third one because, I mean, you can see the setup here, right? This is nearly a textbook setup, but it's like, it is 1.3 R. I really heavily dislike it. And then we can go to, obviously, my favorite from a fib perspective. After the market structure shift, we would pull a fib from our last low to our new high, and we would look for longs on either the 0.5, the 0.618, or the 0.786. We would get front ran once because the price just keeps breaking. So you would get front ran until we formed that new low, that higher low we had over here, right? So I would pull another fib from the low to the high, and you can see, well, if we would have taken our long at the golden pocket and put our stops at this level, you can put it at 1 as well if that makes more sense. And we DCA to 786 because usually, by the way, for those that don't know it, usually if you take a long on the golden pocket, you DCA to 786 because if you break the golden pocket, you go to the 786. 886 can be done as well, but you don't really want to trade with 2 DCAs, at least on the leverage. So you would DCA over here. Your actual average would be somewhere around here, considering that you should DCA equal size or heavier. I went over this a lot in my last stream, but you should always DCA at least equal size, preferably heavier. So this would be your average, and you would TP, because we are in an uptrend, you would TP the 1272. So right over here. Pure intuition, would you look at that. You would TP that, so you would end up with like a 3.2 risk reward. No matter, you can see it like this, right? No matter what style you trade, you should always be going with the trend time frame aligned. You would start on the daily time frame, you would zoom in on the 4 hour and wait for the 4 hour to have that same bias, and then you would look for a play. This time frame alignment system is so incredibly important no matter what system you trade, because you don't want to be going against the trend. You don't want to be someone that is. I'm actually gonna go to our current trend because I know a lot of people are doing it, right? And I wanna show why it's bad. You don't want to be someone that keeps longing every pullback like this. That just keeps longing because because it's like, yeah, we are at support, but it's actually go with my support chart, right? You don't want to be someone that longs over here, that longs over here, and then longs over here. You don't want to be doing this, because if you look at a time frame aligned perspective, you are in a downtrend. You should be looking for shorts. So you don't want to long every support because you are in a downtrend. So you would wait for that to shift, you would wait for it to be in an uptrend, and then you start longing. So as soon as we broke this low, as soon as we entered a downtrend, you would start looking for shorts. We know we are gonna go for like for a low, kind of lower high, right? Because we broke structure. So you would likely short this. You would have gotten stopped. You would short this. That's already the place where you wouldn't get stopped, and you can TP this, and you would short again on the retest because you're in a downtrend. So you know what you need to do, and you can follow that trend. So if I go on the 4 hour, right, because we know we are in a downtrend, if I go on the 4 hour, I would look for structures to shift downwards. Very simple. So, for example, low, high, low, right? We broke the low right over here. So we can expect a lower high and then a lower low. So naturally, we should now be looking for shorts because our 4 hour after this point is in a downtrend because we made a lower low, and we know the daily is in a downtrend because our daily was also making lower lows. So we would go to our SR level in this case, this little line over here, and we put our stops above the high and TP the next support level. And it is that simple. Then we made another lower low. We would go to our resistance level that we have marked out over here. Stops above the high, right over there. And we would TP the next level. And we can keep doing that until structure shifts. So for example, okay, in reality you wouldn't take this short, right? Because that is an RR of 0.8. So you wouldn't take this short, but I'm going to take it anyway as an example. Let's say you take it like this. You would take this short because it makes sense, right? You were in a downtrend. So you would take this short, and let's say you are greedy and didn't want it to be the support level. So let's say you wanted it to be this. We make a higher low and a higher high. So be it. You get stop loss once for going with the trend until the trend shifts, right? But you get multiple really good plays. Like you make 3R over here, you make 5R over here, and then you get stopped for 1R. Well, boo-hoo, you're still up 7R. Who cares? So that is why this time frame alignment thing is so important, because you should know when to long, you should know when to short. And no matter what you trade, you need to have a directional bias. You need to know if you should long or short. Otherwise, you're just going to go on a random chart, mark out support resistance levels or whatever system you trade, and just long every support, short every resistance, and you're going to be like, why are my stop losses getting triggered? Because you need to know what direction the market actually wants to go in. Like, you need to know that you are doing this over here. That is important because you want to sell this and this rather than buy this and buy this, because the risk reward is so much better. When am I up a billion R? Well, that is a good question. If you want to, okay. Serious answer though. A bit more serious answer. If you want to really make good RR, right? Like actually good RR, the best thing you can trade are SFPs. Okay, actually, my throat is hurting, so I'm just gonna get some water. So give me like 2 minutes, and then I'll explain SFPs, because SFPs are unbelievably good for risk reward. So there is a genuine answer to that question. All right, let me just get some water. Okay, there we are. I can talk again. It's like that is the disadvantage of it, like being so hot, right? It's just, it is too hot. You need to drink so much. Oh, we're almost at 60k again, actually. It's kind of nice. Okay. Such a good class. Yeah, I'm glad you like it. I really am. Like, the reactions to my classes have been very positive. Alright, good luck in your meeting. Yeah, I'll post it out this evening. Okay. SFPs, right? So, what do we know? We know that we are in a daily downtrend. Why? It's gonna keep repeating it, right? We had this low, lower high, lower low, downtrend. So, oh, and obviously another low high. So we zoom in. We are gonna be looking for shorts. Right over here. If I were to stay on this time frame, and I'm gonna mark all of the 4-hour highs, right? And let's say, actually, I'm gonna do this completely without the SR lines, right? I'm gonna go on this chart, no SR lines, because SFPs are very simple. You don't need SR lines. I'm going on the 4-hour right over here, and I'm gonna, yeah, see ya, poo poo. I'm gonna go over here, and we have the highs on the candle bodies, right? And we have the highs on the wicks. You can mark all of these out. I sometimes mark them out and then just mark them as like 1 hour wick, 4 hour wick, 1 hour body, 4 hour body, whatever. You mark them out however you want to. And then you're gonna see something like this. So 4 hour candle body, 4 hour wick, 4 hour candle body, 4 hour wick. I am gonna mark the wick red for the reason that I just explained earlier, right? People put their stop losses at wicks. That is very important to understand. That is why the saying goes like that wicks do the damage, candle bodies tell the story. Because this wick did the damage. Everyone that shorted, like somewhere over here, and put their like stop loss above the wick, has their stop loss above the wick. Everyone that's shorted in this area has their stop loss above the wick. So this wick naturally has a lot of stop losses. So what you can look for if you want really good risk reward, right? Because SFPs are one of the easiest way to get really high RR. Is you look for something like this to happen, where price action like this happens, right? We go up, we go all the way above, we go through the last wick, we go through everything, right? We went through the candle bodies, we went through the wicks, and then we still close the body below. This is our last high, because that is the last wick, and that is our last candle body closed, right? That is our 4 hour high. We went above, and then closed the candle below. That is called an SFP, a swing failure pattern. That is an indication of the swing failing. We tried to get above, we tried to flip the trend because we went all the way above, not even the candle bodies, but the wick as well, right? So we tried to swing it. We tried to swing it. What's it called? We tried to swing it into an uptrend for once, and we failed. We pushed price above the wick, and we failed to maintain it. So what we did is we closed below. We are now still in a downtrend. We know we are in a downtrend, and we also grab the liquidity over here. This is called an SFP, and it allows for the simplest play known to man and a very high win rate, very high RR play, where now you would literally just short on the candle open or the candle close, and you just put your stop loss above the wick, and that is it. Like 99% of the work on SFP is identifying them. And like, for example, selling an alert on this wick, right? You just set an alert here, and when it goes off, you go to the chart, and you wait for the candle to close. And if it closes below, well, you can just take a short here, because daily is in a downtrend, 4 hours in a downtrend. We rigged the liquidity, went above, closed below. We're still in a downtrend, we just took the liquidity. So now you can short. And your at least your first TP would be these wicks over here, right? The next stage of liquidity. That would be your first TP. And that is it. That is an SFP. Just to this wick, you would have 2.4 RR for the easiest play of your life. And you can usually extend these a bit, right? So you would take a partial TP here, and then you would just look to your left and say, okay, what else do we have? Well, there's a ton of wicks over in this area, right? So that would likely be your actual last TP. Because if you look to the left, well, I already took this wick out over here. As you can see, we took that out on the last push, right? So this would likely just be your last TP. So let's say you take half off here, right? So you're halfway out of the position at 2.4 RR. So you have realized 1.2 R, and you take the rest out at the next wick. Well, that is 5 more R that you realize. Like SFPs are crazy good for RR. Like SFPs are amazing. We did the same on AR, right? This was a play on the 1 hour that I made because I made it based on the 1 hour close. This was the 1 hour high that I took right over here. I'm gonna mark these first, right? I'm gonna mark them blue again. The candle bodies are blue in this case. And another 1 hour high. And if I go on the 4 hour, it's actually wrong. If I go on the 4 hour, I can mark them as well. I'm gonna mark the 4 hour ones black. Right there. That is our 4 hour high and another 4 hour high. So our black. 4 hour highs are black. The 1 hour highs are blue in this case. And then I would go to the wicks. I'll just do it on the 1 hour, right? I will do the same thing for the wicks. So this is our 1 hour wick, for example. There it is. That is our 1 hour wick. Is this one higher? Yeah, it's slightly higher, right? Or is it equal? Equal? Okay, it's slightly lower. So this would literally be one as well, right? There it is. Close below after wicking liquidity. This will be a short as well. ARTP would be, I think, right over here. So that is right over here, another 7.8 R. So the play we took was this one right here, where we wicked above all of this. We wicked these highs while we were in a downtrend, and we closed below our 1 hour high, right over here. This was the 1 hour high that we took. We closed below, so I literally just said, yo, I am gonna short this. Stops above the wick. And that was it. That is a short. I had a bunch of harmonics there as well, right? Which was the reason why I looked at it in the first place. Because I trade harmonics. I don't trade SR levels or anything. But SFPs are still there. SFPs are unbelievably easy to trade. So that is like, if I see an SFP happen, a good one, I would just take it. Because the play is right there. So that was the play we took. That is the short. And you would full TP this wick. Right over here. And how much R is that? 3.6. It's pretty good. I think it's even higher. Yeah, it's like 3.7. So that is, if you want to get really good RR on trades, you would just look for SFPs. Because SFPs are really good to trade, and they would usually get really good RR. The downside to SFPs is that they don't occur that often, and they are relatively hard to spot at first. You need to like get good at spotting them. Apart from that, I don't really have a downside as long as you have like your proper risk management. Because let's say SFPs work like 70% of the time, you need to still be able to take that 30% loss. Like if you take 10 trades, you need to be able to take, for example, 3 losses in a row. Because that can happen, right? Like if you take 1 trade, you will either win or lose it. It's that simple. And you take one chance of that. If you take 100 on a 70% chance, you're going to win about 70. But it still means you need to be able to take those 30 losses. Do you wait for 2 candles to confirm and then take the trade? If all of the frames are in the same direction, so if the 4 hour is bearish and the 1 hour is bearish in this case, so low, high, low. This is a downtrend. So the 4 hours in the downtrend. Then I go on the 1 hour, and what do I see? Well, or a high, low, high, low. The 1 hour is in an uptrend in this case. It kind of depends on how you measure it, but the 1 hour here is in an uptrend. And that is the one thing that I haven't said yet, because, well, I am a harmonic trader. If you look at harmonics, ironically, even though I gave this whole class, every harmonic is naturally against the trend, because every W means down, every M means up. So we are always I am always shorting against the trend. It's ironic that I'm the one giving this class, because it's like, well, my system goes against the trend, but it is what it is. In general, if all of your time frames are in a downtrend, you only need 1 candle to confirm it. You just need the candle to close below the last high. If you, let's say, the 4 hour is in a downtrend, but the 1 hour isn't, then you would simply wait for the 4 hour. You would look for your time frame to SFP rather than multiple candles. So in this case, from like the standpoint of someone that doesn't trade harmonics, this 1 hour close wouldn't matter. You wouldn't take it on the 1 hour close. I did this because there's a guard here, right? So in my eyes, that was already a point of reversal. Then if I go on the 4 hour, I would have taken it over here on the candle close, on the 4 hour candle close, right? Because we wicked liquidity, close to 4 hour, below this high, this high right here, the candle body high. We close below, and I would target the next wick. So because we are in the 4 hour, we would naturally also take the 4 hour highs. So we would either TP this wick right over here, or this wick, or both. You can take partial TPs, right? You don't need to full TP every TP. So to clear it up a little, we wicked the wick, we closed below the high, right over there, we closed below this line, so we would take it on the candle close, we would put our stops above the wick, and we would target the last low. So in this case, this one, right? If you don't like this RR, well, lucky you, we have determined that we're in a downtrend, so we can also target this one or this one, because these are all lows, right? So we can expect those to be targeted. So now we have a play for RR if you would only take the last TP, but you would take multiple TPs. Yeah. Yeah, my system, harmonics, go against the trend, because every W shape means down, right? If I were to, I'll actually just do it on this chart because it's there anyway. Harmonics are literally the only system to go against, by the way, because fibs don't. It's actually just harmonics. So we had a Gartley right over here. This is a deep Gartley on the 886. So this was my area of interest. Well, naturally, you can see this is a W shape, right? This is our X, this is our A, this is our B, this is our C, and then this is our D. Naturally, this is against the trend, because we are in an uptrend, if you look at this, right? But a W in harmonics means down. So yeah, harmonics are literally the only system I can think of that go against the trend. And yes, that is contradictory to everything I just said, except for one thing. And that is time frame alignment. So I would say that this harmonic is a 1 hour harmonic, because if I'm on the 4 hour like this, I would already see, like, yeah, I mean, this is not really a low, right? Like, it's not really. This is kind of the same low. So I would say this is a 1 hour harmonic. And because this is a 1 hour harmonic, I would go to the 4 hour and confirm the trend. I am looking for shorts based on my 1 hour analysis. So I need the 4 hour to be in a downtrend, because I want to look for shorts based on this confluence. This pattern is telling me it's going to go down here. I want to look for shorts. I go on the 4 hour, the time frame 4 times higher, and I look, okay, is the 4 hour actually in a downtrend? Well, low, high, or what did we just do? We did like, we did, this was our low, this was our high, this was our low, right? This was a structure break, we are now in a downtrend. So, in my eyes, the 4 hour here is in a downtrend because we broke this low. This was a structure shift, we are in a downtrend. So naturally, I am allowed to look for shorts. Most trading systems do the other way around, right? You start on the daily, then to the 4 hour, then to the 1 hour. You go from a high time frame to a low time frame. Harmonics and some other trading systems are an exception in this, where they start on a low time frame and then go on a higher. But yes, harmonics go against the trend, and that is why it's especially important to time frame align. Because I don't want to go against every trend, right? Because I can easily find another harmonic that completely failed because it was against the trend. If I literally just go on BTC. If I go on BTC, right? What chart am I on? I don't think I actually charted KuCoin, right? No, I didn't. Okay. Okay. Daily time frame, downtrend. We established that. I keep repeating myself. So the daily time frame is in a downtrend. I'm gonna take it on this part because I know there's one here. Daily time frame is in a downtrend. So is the 4 hour. I'm trading harmonics, so I don't personally look at the 4 hour, right? There is a valid shark right over here. Starting from this 886, right over here. I could even make it like a 382, right? To make it a bit more perfect. So the ratios are nice now. There it is. This is a valid shark. This shark is telling me that we are gonna touch D and then we're gonna go up. Now, I did not take this long. This was like a week ago, right? And you can remember I didn't long here. We were right over here and I said I am completely out of the market. Because, well, we saw this coming, right? But I didn't long this, even though there's a shark right there. That is actually my trading system. I trust the harmonics and it's telling me it's gonna go up. Why did I not call it long? Well, because if I go on the daily, we are in a downtrend. So it doesn't make sense to long like right next to this low. Because the daily is still in a downtrend. I don't want to look for longs on the 4 hour. It doesn't make sense. So that is why, even in a system that goes directly against the trend, I use my time frame alignment to make sure it goes with the trend. I need my longs and my shorts to be according to the trend on a time frame that's higher than the one I'm looking at. Can I go back to the previous candle example? Let's say the candle body in the 4 hour closes on the price $2 and a wick of it is okay. I'm gonna draw that out. And I assume that it was about AR, right? So you mean like $20? Price is an example, okay. Let's say a candle body in the 4 hour closes on the price $2 and the wick of it is 205. If I put my stop loss at 206, is there any chance that a 1 hour candle can create a wick? Okay, one boring answer, yes, there's always a chance. 70% chance means there's still a 30% chance that you lose. So that is one boring answer, but that's not the answer you're looking for. So yes, there's absolutely a chance. But then for the actual answer. The actual answers, there are more criteria to just candle body close below the last there are more criteria than just a candle body close below the last high, right? So it is very important when trading SFPs to look at this, mark the candle body. Actually, I'll do step for step. Step for step. Step 1, we are on the 4 hour. what trend are we in? We're in a downtrend. That is step one. So we should be looking for shorts. We are in a downtrend. Okay, so let's look for shorts. What is our 4-hour high? Our 4-hour high is right over here. We also have a 4-hour high over here. This is our lower high. So let's take this 4-hour high because we are in a downtrend, right? these are like kind of equal highs. That is the next thing. Like one other thing, it needs to go decisively through for an SFP. This doesn't go decisively through. This is about the same thing. You can probably not even see it on stream, but this is like, that is what you call equal highs. It didn't go through, it didn't liquidate anyone. So this doesn't count. It needs to go through decisively. So we know we are in a downtrend. So we mark our high on said downtrend, right? This is the 4-hour candle body close. We know what our high is, and then we mark the wicks. This is a wick. I'm gonna just remove these arrows for clarity, okay? These are the wicks. We have another wick right over here. We have another wick over here. We also have one over here. So what are the criteria for an SFP? The criteria are: go with the trend. We have a downtrend. We have confirmed that. So we should be looking for shorts. That is going with the trend. Then wick through the wicks that are above the last high. This is our 4-hour high. These are the wicks at our 4-hour high. This one is our, doesn't count, right? This one doesn't count either. It is nice to have them because the more people you liquidate, the higher the chances that it goes further down. So it is nice to have them, but these two are not needed. So we have these two wicks. We went through. Okay, we have now liquidated people, right? People had their stops right over there, and we liquidated them. And then we close below and reconfirm the downtrend. We are still in a downtrend, and because we took this liquidity right over here, we also don't have a direct reason to go up. Those are all of the criteria. Go with the trend. Wick the stop losses of your last high. So we identify our last high, and then we wick the stop losses, and we close below that high. So right over here, for example, right, we are doing it right now. Or I'll finish it actually. So once you then close below, that is where you can take this play. And is there a chance that you get stopped out? Well, absolutely. Of course you can get stopped out, but the chance is way higher that you don't. And the risk to reward is way better. So even if you get stopped out, for example, if you make 3 RR per play, right? Right, like this. You get stopped out 50% of the time, you're gonna go +3 -1, +3 -1, +3 -1. Well, you're still making a profit. So yes, there's still a chance, but the risk to reward and your win rate are gonna be way higher. So if you do it 100 times, you will be in profit. Does that explain it a bit? Yes, kind of. Yeah, SFPs are. That's what I said. That is a disadvantage, right? SFPs are hard to spot, and if you see them happen live, it's very confusing. Because you're gonna see very fast price action, right? And it's gonna be very weird for a long time because you're like, is this actually gonna work? We literally just reached that price like 15 minutes ago. There's no reason, there's no way it doesn't just go back and hit my stop loss. So it's like, SFPs are a bit hard to trade at first, but once you know how they work, they are really good. Yeah, if you go over the video, I also recommend just charting it out, right? I recommend it with everything I teach. No matter what I teach, I recommend go on the chart, chart it out, try it for yourself, use the video to learn from it, and then look at how it goes. You don't need to take every play you chart, right? You can just like chart it out and see what happens. You don't need to take everything. And then if you have any questions that don't get answered in the video, then you just tag me in chat and I'll help you out. So yeah, absolutely. So for example, right now, right, we are still in a downtrend because even right over here, we close the candles below, right? So we mark this out. this is a lower high, and this is again a lower low. We are still in a downtrend. So what can we expect to happen? Well, we might just SFP it again. It is that simple. Because AR is like simply doing that for some reason. So I mark our 4-hour high. I think we can mark this as a 4-hour high. This is gonna be like a 1-hour high-ish. This is in my eyes still the 4-hour high. It's like right here, and this is the highest point. So I mark the wicks. Just like that. And something we can look for right now, because we have our high marked out and we have the wicks marked out, is if it were to happen that price goes above and then closes below our little blue line over here, well, we can simply take the same play again. I have taken this, like this AR short, we literally took it 3 times this week. We took 3 AR shorts like in 2 days. If this happens, again, if it goes above and takes the wicks and it closes below the blue line, I will take it a 4th time. I don't care. Because it's like, oh, every SFP, it's like, it's such an easy trade. And this is the low you would target because that is the last low. Hey, what's up, Caleb? You're driving your new Audi and texting. It's a more for me right now, so yeah, it kind of is. It hasn't yet, right? Because we haven't actually gone through the last wicks yet, so we need to go through the red lines here and then close below the blue one. So it hasn't done it yet, but we still have a full hour in this candle, so we might. And it could even be in the next candle, right? It could be over here as well, where it just kind of go above and then close below. It can still happen, absolutely. So yeah, we might just do that. So I'm also just gonna set an alert on it. And if we go above and then close below, I'll just call the short again. SFPs are quite literally one of the easiest things to trade. Like the question that got asked earlier about RR, it wasn't even a question, it was like literally like sarcasm, right? How do I get a billion RR? Well, this is the closest you're gonna get to an easy system that builds a lot of RR. Completely sidetracked. We were talking about like time frame alignment and stuff. Are you actually gonna take her out, Caleb? Did you do it? Okay. So going back to our little sheet over here. We went over both of these. We went over market structure rather in depth, but especially over time frame alignment. Time frame alignment, I've said it a few times, I think time frame alignment is the most important thing to understand if you actively trade, because it is so important to go with the trend rather than going against it, and just knowing the concept of not longing here, because you should know that, well, we are on the 4-hour, but we determined that the 1 day is in a downtrend. That is such an important concept to understand. So for anyone that like attended, right, if you go out on the charts and you try putting this into play, right, if you try actually doing this, if you have any questions, if you run into them, just tag me in chat and I'll help you along, because this is such an important concept to know. Decision is based on a 1-hour candle or 4 to make the trade. Are you asking it about specifically this chart or in general? Oh, yeah, the way SFPs work on every time frame. So the time frame you want to base this on is, well, quite frankly, it's a boring answer. The time frame you're looking at. So you look for whatever time frame you have for trend, for bias. You start on like a high time frame, right? Let's start on the monthly, for example. And then if you find a bias on the monthly, you would go on the weekly for a play. But if, for example, you start on the weekly, you would go on like a daily for the play. If you start on the daily and you determine your daily bias, you would go on the 4 hour. But if you're looking for a bias on the 4 hour, you would look for plays on the 1 hour. You kind of zoom in divided by 4, right? So it doesn't actually matter what time frame you trade on. What matters is that you get your bias from X time frame. Doesn't really matter what time frame it is, and then you take that bias. You take, oh, we're in a downtrend or we're in an uptrend. So let's say we are in a downtrend, and then you zoom in to a time frame multiple times lower, 4, 5, 6 times lower, something like that. You go to that time frame, and then you start looking for the play. So the daily is in a downtrend, we go to the 4 hour for a play. If the 4 hour is in a downtrend, which we are, right? 4 hours in a downtrend, right over here. So we would look for the 1 hour for a play. So in this case, we might be setting up for an SFP, right? Could very well be. What percentage do you risk per trade? I trade a risk to reward system. So I trade 1 hour. So at the start of a period, I basically use milestones, but I always explain it as a period. So that, let's say start of the month, I take 2.5% of my futures portfolio. So only the portfolio I trade futures with, excluding spot. Take 2.5% of that, and that is my 1 hour for the rest of the month. So 2.5%. Yeah, you can go a bit higher than that, of course. I That is one thing that I recommend everyone to adapt to their system, right? I think 2% or 2.5% is a really nice number. But especially because my trading style always has the same setups at the same time. I want to be able to like spread it out a bit. So I have the number slightly lower, and then I will allow myself for like 4 trades max. But if you are someone that only trades like 1 or 2 trades at the same time, you can go for like 3 or 4%, or even 5 in Caleb's example, right? Because Caleb's really, if you have like a really solid strategy, you can go a bit higher. But you should only do that when you have like long-term data, when you have backtested and journaled a lot, and you know exactly what your system does, and then you can base it based on that. I recommend anyone that doesn't have like years of experience, right, to just stick with like 2% ish. 2% is a great number for risk reward on average. All right. By the way, for anyone that attended this class and is wondering, like, why am I talking about risk to reward? What is that? What do you mean you lose 1 hour per trade? I went over that, like, risk to reward system. I went over that last stream. So if you don't know what it is, I recommend looking at that one. Okay. Yeah. That was actually most of what I wanted to talk about. Well, that was everything I wanted to talk about, right? Because the true fundamental TA knowledge, in my eyes, are literally 2 things. It is market structure and time frame alignment. Yeah, I went over what I wanted to talk about. So if you have any questions, uh, please go ahead and ask. Been talking so much, I finally have time to drink again. Yeah, no worries. I'm glad everyone enjoyed it. I saw a few people during the class as well that really appreciated it. So I'm really glad people are enjoying it. And thanks for the engagement and asking questions, everyone. NG Deepak, Ace, Breaking. Let's see, and Khan, of course. Of course, I really appreciate you asking questions because I know a lot of people have the same questions, right? But don't ask them, so that you guys are the ones asking them. That helps people a lot. Yeah, of course. I will. Okay, I'm gonna end the recording here, and I'm gonna upload it to the recording channel as well later.